Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Today we're going to look at Diageo. You may not even know the name Diageo, but it's the largest, or one of the largest, drinks companies in the world. The brands you know, Captain Morgan rum, Tanqueray gin, Guinness beer, the list goes on. In the United States, Johnny Walker, Red, Black, Premium Reserve. There are many brands in the stable of Diageo, and what Diageo does is takes those brands, leverages those brands, and sells them around the world. They have almost 3,000 members of its sales force calling on restaurants, bars, hotels, liquor stores around the world, and it's a very successful company. So successful, the stock trades at about 19 times earnings, which for a growing company like Diageo may be undervalued. That's what we're going to look at today on the Investment Advisor. The stock has been, as you can see, the stock has been all the way up to about 128, 129 this year, back down to 109. Some fair value estimates say this is an undervalued situation, and you might want to jump at it. You might say, I like the earnings growth, almost 7-8% compounded annually. That's a great return. I like it that it's only 19 times earnings. It could be 25 times earnings. I can live with the debt. Debt's probably over $10-12 billion if you look at it. And the free cash flow, well, the free cash flow is about $3 billion a year. So there's many things to like about Diageo. What's not to like? Well, in China and Asia, there have been reversals. The Chinese government doesn't want its population spending their afternoons and evenings on Johnny Walker or Tanqueray or whatever it is you can imagine they don't like. Then there's health concerns in the US and in Britain and in Europe, and it's pulled off its highs. So 109 is something of a pullback. You're going to see it in the upper 80s? You could, because let's not kid each other. There's a lot of goodwill on the balance sheet of Diageo. There are a lot of brands that, while they're important brands, are not in the top 50. I think they have about 14 of the top 100 brands in alcohol and spirits around the world. So it's an impressive stable. It's not a monopoly. The question you have to ask is, at 109, am I catching a falling knife, or am I buying something that's having a pullback? I say wait on Diageo. I like the company. I like the growth. I don't like 109. I like 89. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.